best thing is talking to people like yourselves that have a good product, but it's coming up soon.
I hope you enjoyed this little update from my conversation with Geoff Styche, an independent financial advisor based here in Lower Hutt, on how the financial market at the moment is affecting first home buyers. Where would you like to start?
Stress tests, how the banks are assessing things at the moment. They are going up. ASB now at 8.15%. The OCR most likely is going to keep going up with the rates we're seeing from the banks on their floating rates. If you're borrowing over 80%, you've then got those low equity margins. You're going to see all of the banks probably above 8% fairly soon. And they just need to make sure that they're above there, so they're meeting their obligations under the triple CFA and making sure they're not being seen to put people into a position to potentially create financial hardship as interest rates go up. Floating rates will go up based on the OCR going up. So whenever the Reserve Bank changes rates, they will go up. You got the Fed Reserve in America increasing their interest rates by 0.75% because their inflation's higher than ours at over 8%. So that pushes international money market rates up, which pushes the swap rates up, which is where our banks generally go to borrow their money. So as we've seen over the last week and a half, all interest rates have gone up again. And that's ranged from ANZ increasing their 6 months, 1 year, 18 months and 2 year rates to ASB, who increased all of their rates.
When is a good idea to speak to a mortgage advisor?
As soon as you're interested in wanting to buy a place, my point of view is have a chat early, find out how it all works, where you fit in the market. If the time is right now and ticks all the boxes, good, you can do something now. If not, at least you can put a proper plan in place and work towards that goal, so you've got a head start on it.
If someone decided after watching this video to engage with you, Geoff, what can they expect?
First and foremost, face-to-face, much better than just a phone call. So that could be either face-to-face sit down or a Zoom meeting, Teams or something like this, and go through everything that way. From there, follow it up with an email to the client and a spreadsheet. It's just trying to help clients in a black and white version where they can see it all in writing and see what it means to them at each point. That's around how much they need as a deposit to achieve their goal to buy a property, what the repayments are going to be, so they can work through and say, what is our actual comfort level about what can we realistically afford ourselves. Tie that in with doing some behind the scenes stuff with affordability from the lenders to go, well, this is how it might jigsaw puzzle all together. So this is what our plan is going to be. So example of that is I saw a couple last night. They're desperately to buy a place. They understand they need to buy brand new because it's going to be a bit easier for them. However, circumstances is they've got other debt in the way at the moment. So we're then going to put a plan in place to say, do they pay that out from their savings now? And then how much more do they need to save to have that deposit, and where would they qualify based on their incomes and what they want to buy? So it's giving them those options so they can see what it is. And then we can go, cool, this is what suits them. And then that's the goal from there that we start working towards.
You can't make an informed decision if you're not informed.
The best thing is talking to people like yourselves that have a good product, but it's coming up soon. It's going to be ready within 3 to 6 months, that you can try and get your finance approved now for that. That's going to cover you for that period. So you've got real confidence that you can get the money to complete. And that's probably the strongest part of that market at the moment.